Falling property prices is pretty big news in Sydney and Melbourne over the last 12 months. It's much less of an issue in Tassie, where prices never rose so much in the first place. I think one of the things that's changed is the bank's willingness to lend. So banks are now not as willing to lend. It's harder to get a loan, and when you do get a loan, they'll lend you less than they did before. One of the impacts from this is people who bought an apartment off the plan a few years ago are now struggling to borrow the money they need to complete the purchase of that unit. And this is one of the ways that we think it will flow onto the real economy, is that construction will fall as a result of people being unable to complete apartment purchases. This doesn't really have a huge impact on Tasplan members. We don't really have much exposure to residential real estate in our portfolio. Tasplan financed the redevelopment of the C.H. Smith building in Launceston. The car park was recently handed over to Launceston Council. We believe it's very important to reinvest back into the communities where our members live, and this is part of our $120 million commercial loan portfolio, which has been delivering steady returns to RBF and Tasplan members for many years. Well, the tariff battle started when the US imposed significant tariffs on aluminium and steel. This was originally about protecting US jobs and the trade imbalance between the US and China in particular. China has retaliated with tariffs, as have some other countries. So the trade war is about more than just jobs. There are recent reports that the Chinese government has used small chips within servers to access sensitive corporate and government information in the US. So the trade war is also about the protection of information and the protection of intellectual property. It's very important, though, that long-term investors such as superannuation members don't overreact to the trade war. So the Australian dollar was at 81 US cents at the end of January, and today it's at 70.5 cents. That's a 13% fall, which is significant. There are probably two reasons why it's fallen. The first is that Australia is viewed as a commodity producer, and the outlook for commodities has worsened slightly as a result of the trade war. The other issue is the high level of debt that Australians have. We're a significant net borrower to the rest of the world. This isn't all bad for our investors, though. Because we have a low level of currency hedging, it actually means that our international equity returns have been really very strong this year. Returns from growth assets, like equities, have actually been very strong over the last 12 months, despite the trade war and everything else that's happened. In a number of cases, they've been 15 to 20%. Returns from defensive assets, government bonds, have been lower. That's partly because interest rates have been rising. We see a number of risks, and we're concerned about those risks to some extent. Geopolitical risk and valuation, with equities having run so hard. We're moving the portfolio to a more conservative positioning to prepare ourselves for a potential retrace in equity markets. If you want to read more about any of this, then visit our website news.tasplan.com.au.